There's not really many signs of inflation due to the tariffs, at least as of yet. It's Friday, May the 30th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell. You can share with friends, family, or colleagues. But we're here today to discuss the economic data that we got this morning, specifically around inflation as well as income and spending. The reports that we get today includes all three of those different factors. Well, let's break down the income and spending first. First of all, the personal income rose 0.8% on a month-over-month basis. That was much better than expected. The expectation was that it would only rise 0.3%. When you look at where that was really driven by, it was not the goods producing part of our economy. It was more the service providing side of the economy. So services are still doing well. The personal spending side, though, that was much weaker than it was the prior month. It was only up 0.2 compared to 0.7 the prior month. So what that does is it drives the personal savings rate high. We actually have seen the savings rate now jump up to about a 1-year high. And that shows that consumers are a little bit concerned about the economy, but it also makes us feel a little bit comfortable that they can maybe withstand some economic volatility. Now let's get to the big report though, and that was the Fed's preferred inflation indicator. And that's the other thing that comes out alongside this PCE report. The core PCE is what the Fed looks at. On a month-over-month basis, it rose 0.1. So it matched the reading last month. On a year-over-year basis, though, it's only rising 2.5%, and that compares to 2.7% the prior month. So it is coming down. The trajectory is lower. It's actually the lowest year-over-year reading that we've seen since 2021. Now, this is good news. The Fed will like this report. But again, let's just remember that this is from April. We won't have really any tariff impact until maybe next month when we get some of the economic data, specifically around inflation. But hey, let's take the win for today. This is good news. The markets are relatively unchanged today. We're going into a weekend and there still is a lot of trade talk out there. So we're not seeing big moves in the market on this. We think this still keeps the Fed probably on the sideline in their June meeting. They don't have another meeting after that until July 30th, and then the next one's in September. We're pushing the rate cut expectations out to probably that September meeting, but we'll see how the economic data materializes between now and then. That's all we have for this week. There's lots more next week. It's the first week of the month, and the first week of every month is really jam-packed with economic data. So we'll get data on manufacturing, on the labor market. We'll end the week with that market-moving unemployment report. If you like this, please, you can go to a further history of our podcast at marketswithmegan.fm. Thank you.